Hello and welcome to a brand new show of Market Makers. Volatility is often considered to be a long-term investor's best friend. These are volatile times, turbulent times. But what about a basic investment approach? Is it a good time to put money to work or tough times are here to stay? So to understand the current market environment, talk about value and focus on individual stocks, I have a perfect guest. Market veteran Vijay Kedia. Vijay, fantastic to have you back and thank you for joining us. And the reason why I planned this interview is because markets are turbulent. Things are uneasy and volatility has made a roaring comeback. What is your assessment?
I'm still a bull.
You've always been a bull. So what's new about it?
The only difference this time is this. Last time you had asked me whether I'm a table thumping bull or not. So I said, yes, I'm a table thumping bull. Even now I am a table thumping bull. But maybe the noise of my thumping is little soft this time because of the scenario worldwide and the whatever happened last week in our stock market. But you can say I may be disappointed, but I'm not shattered. I'm still bullish and I think it's a good time to buy.
Why do you think this is a good time to buy? If a company like Lehman Brothers can bring the US banking system on verge of a bankruptcy, I wonder if China goes under, what will happen to the world?
You see, I don't understand all these things. In my career of maybe more than 25 years, I've seen this kind of volatility thousands of times. Okay. And every time we are getting some new story. Sometimes Greece is failing, sometimes Spain is failing, going bankrupt, US is going bankrupt. For example, latest example, till 6 months back, beginning of the year, China's stock market was lying like a dead sea. Nothing was happening in Chinese stock market. All of a sudden, the story came that Chinese, in spite of slowdown in China, China is growing 7%, which is the highest growth rate in the world. And all of a sudden, FIs become very active. Financial institutions, especially foreign institutions, become very active in China. Maybe because the government liberalized their investment scheme into H shares or A shares or whatever. And finally, you see what happens in merely in 1 year times, Chinese stock market doubled from 2,200 to 5,000 something, 5,000 plus. What is the end result? Ultimately, there is a massacre. People have been butchered badly, and the biggest victim is the local citizens. Most of the accounts were opened by the high school graduates and high school students. They have lost their lifetime savings of their parents. So ultimately, this kind of scenario we have seen many times in India also. Every time, every year, we are coming out with some new theory or some new story. If you remember 5 years back, we were given this thought that US is on the verge of bankruptcy, will collapse. And especially the US currency is a toilet paper. So many gurus used to tell us that it is a toilet paper.
The dollar will not be a reserve currency.
Will not be a reserve currency. What happened in those 5 years? US dollar has appreciated against all the currencies of the world by a great margin.
You are of the view that whatever is happening in the world is temporary.
Yes, I think so. It's temporary. And let us not forget about India is the knight in shining armor. Let us go through the report of Moody's which came out last week. Half of the world is slowing down or under recession. So India is the only savior. So I think it will get its due.
The world has changed. Things are much more globalized now. What happens to crude will have an impact on Indian economy. What will happen to gold will have an impact on the Swiss economy. Can India remain isolated with what is happening in the world? Yes, on a relative basis, our positioning is better, but the spillover effect will clearly have impact on us as well.
Yeah, but there are good effect and bad effect. Both will come together. For example, let us come to the commodities cycle. So as we all know that India is a commodity consumer. So obviously we will be benefited by the fall in commodities price and crude price. Okay. And secondly, gold is in a bear market. I think gold may remain in a bear market for next 5 years, maybe. So that is good for investment into stocks. Which other options do you have in your life? If gold is not appreciating, property market is stagnant, then what do you have? Only stock market.
So Indian savers have no other option but to buy stocks.
Yes. And don't forget, what I have seen the change. And if I can tell you, I will give you an example. I remember a dialogue of Amitabh Bachchan's, one of Amitabh Bachchan's movie, कि जो 25 साल में नहीं हुआ वो अब होगा. So for last 25 years, foreign institutions had been ruling our Indian
I heard
stock
this
market.
dialogue when I started my career also.
Yeah.
But trust me, nothing changes actually.
Yeah, it takes time, because FIs, foreign institutions are very strong, very powerful, very dominant, play a very dominant role in our Indian stock market. So now look at the data which we are getting from the mutual funds, the kind of money now coming into mutual funds, that is mind-blowing.
Yeah, that's very heartening, very, very heartening.
Yes, and now I tell you, whenever market falls, I get phone calls from my friends and relatives, कि अभी तो बताओ मेरे को क्या लेने का है.
So there is no panic. People want to buy. That's the basic difference between this fall and the last fall.
Yes. So I
That
think now
investors are eager to buy.
Yeah, eager to buy. They are becoming smarter. They have now understood the stock market is the place to buy at every fall, not at the peak. So this sea change is happening in Indian investors' mind.
Has value emerged in this market?
I think so. Values are there, but again there are two sides. It depends on which stock are you investing in. So, but I think market is cheap. Although market may fall further 5% or 10% from here, because that nobody can predict.
So 10% on the index, if globally something goes wrong, cannot be ruled out. You should be prepared for
You
that.
should be prepared. Every time you should be prepared. It is like, you're fighting at the border. You never know कब कोई गोली आएगी और तुमको लग जाएगी. You should be, every time you should prepare for that kind of fall in the market.
What's been your basic strategy? Are you shopping in this market? Because you should buy when things are cheap. You should buy when there is fear, when there is blood on the street. The magnitude of crash may not be as strong as 2008 or 2011, but stock prices are off 5 to 25%.
You see, I'm a blind bull. Okay, I don't have extra cash. Whatever cash I had, I'm already invested. But whatever little bit here and there I'm having, I am investing in the market.
One basic criteria for stock markets to go up is earnings. What derives earning? Essentially potential or visible underlying growth. If China slows down, there would be a concern. There would be a global growth scare. Isn't that a valid reason why market should be nervous and why they should remain nervous?
You can look at from another point of view that if China is slowing down, that could be an opportunity for India. So we are having 6,000 stocks, I think, or 5,000.
6,500.
6,500 stocks. To me, stock market is only 500 stocks. So this is what you should do in stock. That is what your research comes to, forefront. You have to choose only 50 stocks out of that 5,500 stocks.
So in last 3 months, you've not added anything or you've not subtracted anything?
I've sold some shares in last, rally, and I bought some shares.
Which are the stocks you've sold? Which are the stocks you bought?
Okay, I'll tell you. I sold NBCC.
Why is that?
Because I thought the company is having a kind of monopoly. Okay, because they are getting the project not through the tenders. So it can.
It's an inherent advantage they have.
Yeah, they have got yes. So, but I don't know in a country like India how long this thing will last. Tomorrow,
And it's a very basic business. It's a cost plus 12-13% plus business.
Business is very good. Business is very secured. 12% margin is also very lucrative and fixed margin. So from that front, I don't find any problem. But suppose tomorrow somebody file a pill. Why should? Suppose this is just a thought.
Of course.
So that is why I sold my NBCC.
Basically, you fear that NBCC may not be able to enjoy that natural moat which is enjoying because it has a government, because it is a government company.
Yes.
Okay. Let's talk about the interesting part now, which is what have you bought of late?
No, I added my old stocks only. Because
same old.
Yeah.
So let's take the clock back and revisit some of the stocks we've discussed in the past. We've discussed Sudarshan Chemicals extensively.
Yeah.
Just for the benefit of our viewers, Sudarshan Chemical is making raw material for the paint industry. Have they hit a jackpot? Crude prices have come down.
Yeah.
Will the balance sheet for Sudarshan Chemical naturally and automatically improve because margins will expand and working capital requirement will be down?
Yeah, that has already started happening. If you go by the June quarter results, interest rate is drastically down, and working capital is also, has come down. So they will get a natural advantage.
What is your commitment in Sudarshan? How much percentage of the equity do you own?
Around 5%, little less than 5%.
But it's a sizable investment for you.
Yeah, for me it is sizable.
Are you happy to own this stock for next 5-7 years?
Yeah.
What makes you so bullish on a company which is ultimately a converter?
No, converter, because all their products products are researched by the company, okay? And secondly, management is very good. As I have always said that I like the first criteria for me to invest in any company is the management. If management is having a good track record, then I don't mind.
What is so good about the track record?
No, because I'm following this company for last 20 years.
Okay.
Okay. So they have seen many ups and downs in their sector, ups and downs in Indian economy, ups and downs in the company, and they came clean.
So Sudarshan Chemical will be part of Vijay Kedia's long haul portfolio. Long haul means next 5 to 7 years.
Yeah, this is what I think.
Do you have a price target in mind for Sudarshan Chemicals?
No, I don't have any price target for any of my stocks.
But when you invested in Sudarshan Chemical, you were not anticipating that crude prices will come down.
No.
So whatever is happening to crude,
yeah, it's a bonus.
It's a bonus.
Yeah.
Okay. Let's try and understand the impact of crack in commodity prices. What will happen? What will happen to some of the commodity producers, commodity consumers like Sudarshan? Is that the big story now?
Commodity consumer will certainly be benefited.
But they will have to pass on some of the benefits.
Even then they will be benefited because their workings, capital will be required, less capital will be required. So that is good for the industry.
Now Sudarshan Chemical has decent EBITDA margins, but APAR has never reported solid margins.
Yeah.
What makes you bullish on a company where the track record, which where you insist that track record is very, very important, track record has been volatile?
Track record of the management has been very good in APAR. And don't forget the company is having a turnover of 5,000 crore.
But where are the margins?
Yeah, there is no margin, but at the peak they had a margin of 4.5% to 5%.
Okay.
Now they are running.
That's not high.
No, it's net profit margin I'm talking about, 5%.
Okay.
So that is okay. It's not very high, but it's okay. But see the turnover.
It's not IT pharma.
Yeah, it is not IT in pharma. So now suppose if they have a turnover of 10,000 crores, which they are projecting by 19, and 5% margin that means 500 crore of net profit margin, which will be huge.
So again, like Sudarshan Chemicals, you're happy to own APAR for next 4-5 years.
Yeah.
Is APAR a sizable commitment for you?
1%, not much.
That's a sizable commitment.
Yeah. Exactly.
What I like about the way you approach market is that you're not restricting your portfolio to a particular group or a particular sector. You're very diversified.
Yes, very diversified.
Isn't that a problem? Because most of the global experts, or the gurus, if I may use that word, they are of the view that you should not diversify. Stick to your core competence. But that's not your core philosophy. You got investments in IT, you got investments in chemicals, you got investments in auto, you got investments again in building companies, material companies.
Yes.
Why do you believe in diversification?
No, because I can't keep all my eggs in one basket. Okay.
But concentration is better, isn't it?
It's
long as you know the business.
Yeah, so right now my core portfolio must be consisting of 20 shares only. So that is not big, that is all right. But maybe sooner or later I will consolidate them and I will try to bring them to maybe 10 shares. But that will take some time.
What could be the mega trend for India?
I think mega trend, you should identify shares which are consuming commodities. Those can give you a handsome return in times to come.
That's one trend we've discussed, and that's the reason why you like Sudarshan Chemical and APAR.
APAR.
What about the consumer side? Do you have any investments in the consumer space, any companies which have got brands or any companies which directly, indirectly would benefit if the urban consumption demand is back?
Like I'm having CERA sanitary ware. That's a good brand. And I intend to hold for another 2-3 years.
What makes you so bullish on this stock?
Because that is one of the few listed company in sanitary ware.
Is it that margin or that business is extremely competitive, some would argue?
No, it's not competitive. They are having a decent margin of 16-17%. So it's a good company.
But you've been an early entrant in CERA.
Yeah.
At what price did you buy this one?
Around 30-40 rupees.
30-40 rupees. And you intend to hold it for another 4-5 years?
Yeah, maybe.
How are you approaching this entire consumer space process? CERA sanitary ware, yes, it will benefit if the housing demand is there.
Yeah.
But what about some of these brand owners? What about some companies which indirectly touch you on a daily basis?
They will keep on growing at the same growth rate, but they are very expensive.
What is your view on commodities? Everyone is of the view that the super cycle in commodity is over. The super cycle in credit is also over. Some of the commodity stocks are off by 50 to even 70% from the recent highs. Is it a good time or a good idea to buy into fear there?
I don't think so, for the simple reason, whenever commodity was booming, that time also, if you had invested in commodity shares, you did not make much money. So how can you make money in worst time when you did not make money in good times?
So you will not be a buyer in a Tata Steel or a Hindalco just because they fall?
No, never.
What are the three things an average investor should do or should not do in this market?
According to me, most important thing is to keep faith in Indian stock market, Indian economy and Indian equity. And I would like to say few things to my fellow investors. One thing is this, that an idea can change your life.
Give me an example.
If you can identify one good stock, for example, like you are asking, like CERA sanitary ware, I could find out or could discover at the rate of 30. Now it is 2,000 rupees. So it gave me a handsome margin in my lifetime. So an idea can change your life. So this is what people should look for. And second thing, Rome was not built in a day. Okay, so you should stick to your stocks, come what may. All this tsunami kind of or quit India movement or all this fall and rise, you shouldn't get disturbed. And third thing, I think you should remember stock market is a place of regrets. Every time you have regrets in the stock market. If market moves up, you have regrets because you did not buy adequate quantity. If market is falling, you have regret that you didn't sell your shares. So you will have regrets. So remember one thing, जो मिल गया उसी को मुकद्दर समझ लिया, जो खो गया मैं उसको भुलाता चला गया.
So what is your biggest regret?
My biggest regret, right, I bought one share Stewards and Lloyd because the company was sold out to Indian Oil Tanking Limited. And that is combined of Indian Oil and oil tanking. Oil tanking is also Fortune 500 company, some German company. So I was of the opinion, since two giants have come together and bought this company certainly should do well. But the company, oil tanking, along with oil tanking company also tanked.
The fortunes also tanked. But you still own that stock?
Yeah, because I have no exit in
so what went wrong?
No, nothing. They couldn't deliver. I think they didn't intend to revive the company. So that the intention was not there.
I'm going to shift today's, the scope of our discussion and talk about the Nifty or the Sensex level. This is 2015. As we speak, Sensex is meandering in and around 30,000. You still feel that by 2020 or 2021, we could go to 1 lakh on the Sensex? I
think so. We may go because stock market, you see.
Vijay, then you're really talking big numbers.
Yeah, big numbers.
3x for the index in the next 7 to 8 years.
Yeah, if you grow 20%, then I think that is not a...
Can we grow at 20%? Earnings are what? Early double digit now.
That is okay, but whatever company I am investing in, if economy is growing 7%, so I assume that whatever investments I have made, those companies should grow 20%.
Give me 3 names where are you confident of a 15 to 20% growth irrespective of the environment for next 5 years?
For example, I am not recommending any shares. I am just telling you what I have done for myself. That is like SUDARSHAN should grow 20%. Even APAR industry should also grow 20%. Even Repro should also grow 15-20%.
But if you get a company which is growing at 15 to 20%, you're happy to own it?
Yeah, I'm happy to own it. The management is good, I'm happy to own it.
You don't own any large cap stocks?
Large cap I don't.
No Nifty 50
I don't understand
companies.
Large caps because too much volatile.
HDFC Bank is not volatile.
No, it is volatile in the sense, suppose whenever market is down, you sell your shares if it is in FNO and if it is in it's a large cap shares because liquidity is there.
So you don't buy FNO stocks?
No, I never buy FNO stocks.
You don't buy in FNO or you don't buy FNO stocks?
FNO stocks.
Okay.
Yeah.
And you don't buy in FNO as well?
No, I do FNO sometimes to teach a lesson to myself that this is how you lose money.
So you will not advise our viewers that they should trade in and out of FNO. Trading should be avoided, at least according to you.
Not at all. No. Especially to the investors which are first timer in the market or not first timer. FNO is very cancerous. This is what I feel. As like Warren Buffett also says, it's a weapon of mass destructions. Okay. So if you are smoking, you may die in 10 years, 20 years or 30 years. But if you are doing FNO trading, then you may die.
But if you take big bets and if the big bets, they work in your favor, then you also make disproportionate amount of money.
No, that is all right. But that success rate in FNO is hardly 1%. And 99% you ask anybody, any of your friends you ask if they are doing FNO, they will tell you that they lost 10 years of their earnings or 5 years of their earnings they lost in FNO.
So according to you, the first basic rule of making money in stock markets is that don't trade. Don't time the market.
Yeah, don't time the market, don't trade the market, and don't do FNO. Because remember, if Rome was built in a day, in FNO, Japan was destroyed in one day.
So even though you've been in the markets for about, 25 years now, you are still advocating that one should not trade.
Yes, one should not trade. One should never trade.
You're confident that India is in a strong spot. Relatively, we are a better economy. And frankly, I think we've been lucky because crude prices have also come down. And in terms of cycle, we are on the cusp of a recovery. But if I look at the GDP data, the core data, the kind of earnings we've got for the Nifty 50 companies, they don't inspire too much of confidence. The high frequency data is not telling me that the economic revival is around the corner.
It depends. I don't go by all these data because they are very complex and I'm not that much learned to understand all these data.
So you like to keep simple things?
Simple things.
So what are the data points you look at?
I look at if the country is growing and there is enough, if the country is growing and if my stocks are performing well according to whatever parameters I have set, if they are moving in that parameters, then I'm happy with it.
Are you still bullish on BEL? That's the stock we discussed last time.
Yes, I am bullish on
Even
BEL.
though the stock is at 3,000?
That does not matter. Price does not matter. It was 4,000 rupees last fortnight. Now it is 3,000 rupees, 3,200. That does not matter.
A very simple question before we wrap now. You have a different investment profile. You have a lot of patience and your time frame is also different. Your understanding of market behavior and market cycles is also very different. So, some of our viewers may not be expert like you. If they have to make a portfolio which could be called as a low risk portfolio, which are the 3 stocks which you would recommend to our viewers which could be called as low risk stocks?
You see, I'm not an expert, first of all. A second thing I would like to tell the fellow investors, if you don't understand the mechanism of investing, then go through the mutual funds. That is the best thing. If you don't know how to drive a car, you better should hire a driver. So at least you will save your skin or save your life. So that is the best things to follow.
But if I put a gun to your head and insist that Vijay Kedia, you have to give me 3 names.
I will tell all these names where I am invested.
So according to you, they are low risk stocks. You don't see too much of downside in a Repro or for that matter in a SUDARSHAN.
I don't see much downside because then hardly they are quoting at 10p.
So downside is limited. The upside could be unlimited at least in the next 3 to 5 years. Before we wrap, yes please.
And one more thing I would like to tell to our investors. We have faith in Indian story. We are a 2 trillion economy, 30% saving is $600 billion every year we are saving. Even 10% of that money, $60 billion comes to the market. We can really face this volatility which is happening because of the foreign institutions. If they are catching, suppose, cold in Greece, they are sneezing in India and we are catching the flu. So
that should not happen.
Yeah, that should not happen.
Like expert
and I think time is going to come that we will become so strong. Domestic force, investing force will become so strong that we will face all this.
It's heartening to see what happened in August. 17,000 crore of selling by FIs and that was gobbled up by domestic institutional investors.
Yeah, so something certainly changing at the bottom.
The mindset is changing.
Mindset.
And preference towards equity is changing. What I really like, Vijay, about the current setup is that there's no panic. Last time when markets fell by 10 to 12%, there was outright panic. We could feel the tremors. Right now, I guess everyone is excited because markets have fell because that is giving them a better entry point.
Yeah, and that is for the first time I think it's happening in the history of Indian stock market.
So I guess equity as an asset class is getting some preference. Really appreciate your time. Glad you could join us.
Thank you very much.
That's it on this edition of Market Makers. A famous man once told me on Dalal Street that good news and good prices, they rarely come together.
Yeah.
Right now, news is bad, but according to Vijay Kedia, prices are good.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.